welcome K. Ramakrishnan, who's the MD South Asia World Panel Division at Kantar. Kantar's recently released their update for the quarter that we're currently in the FMCG space, and they say that there could be an impact this quarter on account of a high base, and they believe that there could be some sort of recovery coming by only from the third quarter of calendar year or the second quarter of FY25. Thanks a lot, Ramki, for joining in. Let's get down with the basics first. In terms of growth, what is it that you witnessed in the first quarter of FY25? If you could break that up, in terms of value, volume, growth in urban and rural. Let's get the basics out first.
Yeah, so we've had a reasonable growth in the first quarter of financial year. However, if you see how rural and urban have been behaving in the last whole year, if you see, urban has been ahead of rural. And for the last 3 quarters, the growth rate at which urban is growing has been flat, but rural has been inching upwards. The worm is moving upwards. So much so that in the first quarter itself, it has kind of overtaken the growth in urban. So rural is growing faster than urban. So the urban slowdown can be a matter of concern because consumption is higher in urban, more number of categories are bought in urban, etc. It's not a slowdown, it's a slowdown of growth. But the green shoot of rural is something that all FMCG players must be very happy about. The green shoots that we see if fundamentals are always right in rural, right? Like whether it's the minimum support price or monsoon or any of those. But however, the consumption has been lagging and now it's going up. But it's still not completely out of the woods. Like you said in your introduction, the Q2 of last year was a very, very heavy quarter in terms of growth. So actually on that base to grow will be difficult. But the rural positivity is what keeps us strongly optimistic about it.
Okay, so Mr. Ramakrishnan, is this a trend you expect to continue for the remainder of the fiscal as well? Rural outperforming, and we do have a lot of triggers in the second quarter, but again, we have a high base. So what's the expectation for the remainder of the fiscal?
So we expect this kind of a muted growth to continue for another quarter for sure, but the last quarter should see some real positivity. I say that with a reason. The reason why the muted growth is more because of the base effect of last year. The second quarter of last financial year was heavy growth. So on the top of that, getting this growth will be difficult, even though we are seeing green shoots. That said, the urban slowdown will probably continue into the quarter, and perhaps we don't even know if it will come back in the last quarter, but rural should turn us around in the last quarter.
Could you put some numbers to it?
Yeah, so we don't project numbers, but at the moment, the rural is faster than urban, but we expect that growth rate, which is in the low single digits, is about 4.5%, etc., to go up to about 6% in the last quarter, which will be a strong growth. And urban, even if it remains the same, the overall FMCG growth will also cross the 5% barrier.
Okay.
In volume terms.
In volume terms. What's the update on the premiumization trajectory? Because we did see that K-shaped recovery. Do you think that is something which could come down now the inflation fear is behind us? Will that be a new trend that we'll see going forward?
So interestingly, value growth was consistently ahead of volume growth for almost 2 years. But if you take on a quarter basis, what's happening is in the recent quarters, the volume growth is actually pincering the value growth, which means that the growth rate of both volume and value are more or less the same at this stage. That said, the K-shaped recovery and the fact that there is some amount of polarization in the market in the sense that the premium categories, or let's say the discretionary categories, let's say like the bottled soft drinks or even snacking to some extent, and some of the personal care products are seeing strong growth in spite of the fact that urban is slowing down and things like that. But these categories, for example, bottled soft drinks is seeing an increased consumption even in rural markets, which means the rural growth and rural consumption is more or less getting equal to the lower SECs in the urban. So that's a good sign for some of these categories. That said, the overall numbers is what I stated earlier, is likely to be in that low muted level in the next quarter and recover in the last.
All right, some categories doing well. So from a bottled soft drink perspective, maybe from a listed standpoint, one should look at something like a Varun Beverages. We did have a brokerage right on Varun Beverages last week as well. CLSA, I believe, did upgrade their estimates on the stock because of good belief of good growth on account of hot summer that we saw this time around. I wanted your thoughts particularly on the impact that increase in telecom tariffs could have on consumption, because at the end of the day the customer's share of wallet is limited. Inflation has looked like it's abating, or the worst of inflation is behind, but then suddenly they are hit by a 15 to 20% hike in telecom prices. So will that have an impact on consumption? If yes, how much could that be?
That's a very valid and pertinent question, Mangalam, in the sense that if you see, we've compared the wallet of a household 6 months back to now, if you see what are the areas in the wallet that have actually seen a jump are the following. One, healthcare expenses. Healthcare, in relation to healthcare per household expenses 6 months back to now, there is an increase. Second, EMIs and cost of financing, cost of buy now, pay later kind of scenario, that has gone up. But telecom has remained constant. It has not gone up in the last 6 months. I mean, if you take a 2 6-month periods, it has not gone up. But interestingly, the amount of money that is spent, the amount of money that share of the wallet that is spent on telecom is the same whether if the household is urban or rural. So to that extent, telecom plays a very key role in the wallet in the overall scheme of things. Second of all, what's also happening is that the growth rate of the household in terms of telecom expenses is also higher. So given these two factors put together, I think the increase in telecom will have an impact on the overall wallet. And overall wallet, one of the things that could get affected could be the discretionary products, whatever little they are in rural. So it will have an impact. But that said, that should kind of get compensated by the green shoots that we are seeing in the rural space.
Okay. So, with telecom, the other thing that comes is QCOM, right? That has been a big part of our shopping criteria for the longest time. How has that been contributing to volumes and value? And what is the expected growth here? Will it continue to be the bigger part? Because now we are seeing that trends are changing.
Yeah. So overall, from a household lens, we look at everything from a household lens. If you look at a household lens and if you look at grocery stroke FMCG as a category, the contribution of entire e-commerce is in low single digits, right? And Q-commerce is a part of it. Yes, the growth rate in Q-commerce is quite sharp, but its ability to swing the needle from an overall FMCG growth perspective is a little limited. So therefore, I won't expect that to change the growth trajectories of FMCG as a whole. But within itself, Q-commerce certainly is seeing growths which are unprecedented in the sense that compared to the rest of e-commerce, it's more than twice or thrice.
All right, twice or thrice. Final question before we let you go then. If you had to, leave us with a couple of big trend calls that you would make, because some of the categories are doing extremely well. Liquid soaps is one of them. You have liquid washes, all of them seeing a big jump. We have, fabric softeners, etc. So some underlying trend where you see green shoots, and these are categories that you would call out for the next couple of years?
Yeah. So like I said, the underlying truth is about first the rural growth. So whatever we are seeing in rural has limited number of categories. But at the same time, in rural households, we are noticing that the premium products or premium categories are making an entry. So to that extent, affordable premiumization, if marketeers pursue that angle more from a rural perspective, I'm sure there is likely to be growth of the premium categories as well. So some of those premium and or discretionary categories include bottled soft drinks, include fabric softeners, include all liquefaction, whether it's wash, fabric wash, or utensil cleaners, or any of those. Liquefaction is a trend that one can definitely watch for, even from a rural perspective in the coming quarters. That is one to be noted. Second, staples are more or less flat. There's no decrease or increase. Edible oils are seeing some amount of stress. Given that during the peak of inflation, there was a heavy price increase in inflation. So in edible oils, to that extent, the consumption of edible oils dropped a bit, but it's coming back to some level, but edible oils could be under some stress. Personal care, it's always going to be polarized. There is going to be a set of consumers who don't care and who are going to continue to purchase the premium set of products. But the mass in general kind of products are going to be in line with the rest of FMCG. That would kind of sum up my take on the overall FMCG categories. I hope that helps.
That's a great summary, actually. Thank you so much, Mr. Ramakrishnan, for joining us today and talking to us about trends that we're seeing in the FMCG space. And it continues to change in favor of the rural markets for now. It was a pleasure speaking with you. Thank you so much for joining us today.
My pleasure.
Okay, all right. With that, it's time for a break now. Sudeep Shah of SBI Securities will join in with some trading strategies on the other side. So stay tuned for that.